You're watching the NWR Virtual Resources Conference, May 2020. On the line, we have Auteco Minerals. Auteco has an earn-in agreement over the Pickle Crow Gold Project in Ontario, Canada, one of Canada's highest grade historical gold mines. The mine historically produced 1.5 million ounces of 16 grams per tonne gold. Auteco is on track to deliver a maiden JORC 2012 compliant resource for Pickle Crow in the June 2020 quarter. Marcus Harden is on the line. He is the Chief Geologist. And we also have Auteco Executive Chairman, of course, Ray Shorrocks, who has more than 20 years of experience in corporate finance. Ray has been involved with a diverse range of ASX-listed mining companies, serving on boards and providing advisory services. Ray is the former director of a major Australian investment services company based in Sydney, where he led the corporate finance department. Over to you, Ray and Marcus at Auteco.
Thank you, Laura, and welcome everyone to Auteco's presentation. It's great to be able to be here with you. I will take you through this presentation. Hopefully it won't be more than 20 minutes, but I'll take you through the key elements. There's our disclaimer for everyone to read at their leisure. So let me get stuck into the most important thing I think about Auteco is that we have amassed a fantastic board and management team, all of which are there on the screen in front of you. Laura's done a great job of describing my background, but also it's important to understand that I was the ex-chairman and founding chairman of Bellevue Gold, which was and still is a very successful company listed on the ASX. On the board with me, I have Steve Parsons, who's a non-executive director, also Mike Naylor and Sam Brooks. Interestingly, here we have Marcus Harden, who we can ask lots of technical questions later, but Marcus has devoted a lot of attention to this particular asset and is going to move to Canada when borders allow. Marcus has spent a lot of time in Canada already, going through all of the data that we've got. In terms of some of the history here, I'll just talk about the corporate background before I get into that history though. So as you can see, we've got quite a few issues, shares on issue, but most importantly, we have a good balance sheet, and also most importantly, board and management are heavily invested in this particular company. We have all bought shares. Every single person that you see in those photographs in the preceding slide, all paid for them and have bought on market. We have just recently raised 5.1 million, which gives us a very healthy cash position of 5.6 million. In terms of where we got to with this particular project, we have been looking at this. I left the board of Bellevue back in August last year. We spent a lot of time looking for new projects, most importantly with some very key characteristics. One, they had to have a good mining jurisdiction, somewhere where the ease of mining and the ease of finding projects and developing them up had to be at the forefront. So we really had limited ourselves to Australia and North America. We felt that Australia had been well and truly looked after by current companies, and we managed to get this particular project after months and months and months of due diligence and negotiation. And we picked this one because it was a project that it was a high-grade gold project in a very prolific mining district in Canada. And those that aren't familiar, I'll go through that later. But our package consists of over 300 kilometres of tenure in areas that have got some very, very big producing assets with some Australian companies, but also Canadian companies. This particular asset was heavily developed between the 30s and the 60s, where, as Laura said in the introduction, some 1.5 million ounces at over 16 grams a tonne had been produced. It closed in 66, not because it had run out of ore, importantly, but primarily because gold prices had dropped to something like $35 an ounce, and therefore it was unprofitable to continue going. And after that period, it moved between corporate hands, which lo and behold, got to a point where a couple of Canadian companies had got onto it, but their attention was not on this. And the previous owners, direct previous owners, First Mining, had a project called Springpole, which they have 5 million ounces, and their attention went there. So we had this fantastic opportunity through a happy chance to purchase this particular asset. And I'll take you through those purchases, the actual purchase itself later on. But you just need to be aware that now we've got this asset. We have, you know, a hiatus period of 50 years where no real modern exploration took place. We have really good infrastructure there, which I'll take you through again. It's a low risk earning acquisition. We've talked about the board, and we've got excellent gold recoveries. Most importantly here, we have a mining license until 2067. So this infrastructure that I talk about was on the next slide here. It's all round. We get there all round. And I don't know for those that can see my pointer here, there's Toronto over there to the right on the east coast. And it is a short flight over to Thunder Bay here. And then you transfer to a small charter flight, and that takes you up to Pickle Crow. It's about a 45-minute flight. Once you get to Pickle Lake, it's a short, on good roads, 15-minute drive to Pickle Crow, where our project actually is. At the site itself, you can see a picture to the top left-hand corner. We have a fully functioning core group. We have grid power. We have those sealed roads, as I mentioned before. There's daily flights to Pickle Lake. And we have on-site exploration infrastructure, which is the core shed I mentioned, existing mill, and 600 kilowatts of generation. And we have all year round activity that we can look at. And I'm going to talk about some of our activity shortly. We're in this, as I've mentioned before, world-class mining district. Our neighbours, Red Lake, Musselwhite, Spring Pole, Maiden, Westray. You can see in the map there where we are orientated to the rest of that group. So that province, highly prospective and highly producing. The next one is that this is where we'll be focused. We will be focused in the very near future to around this head frame that we talk about there. You can see the old Pickle Crow head frame in the right-hand corner, and some of the core that Marcus has been working on over the last little while. We have been undertaking already geological, structural, and on-ground reviews. We will start drilling post the 19th of May. So in other words, in less than 2 weeks, we've been doing some on-ground field testing, and we look to, in the very near future, again, this month, of converting the 43101 resource out of Canada into a JORC compliant resource, which will be very exciting for us, and that's very, very soon. Here we are. This you will notice here, if you can see my pointer, this is where we'll focus our immediate attention in our drilling campaign, which is a 5,000 metre diamond drilling campaign, which commences, as I said, on the 19th. But if you can look at some of the areas that we've been looking at around this head frame, and you can see that the near mine targets include things like 13 metres at 43 grams, 3 metres at 134, and I'm sure you can read there. So we've got these walk-up targets. We've got lodes that are open, down plunge and adjacent to the existing underground development. And we have numerous walk-up targets, as I talked about before. Here we have, this is the immediate area in which we'd be looking at. And as you can see here, a lot of work's been done, but here in this middle, you're really looking at vein 1 and vein 5, where there has been lots of great drill results, but no follow-up. Nothing has been done since there. And so you can see in this area here, when they were drilling to look at vein 1, they drilled through here and they discovered vein 22 and 23, completely unmined, where they had these intercepts, as you can see there, which are fantastic, and a lot more work needs to be done around this area, completely unmined. And as I say, it's open at depth, up dip, east and west. So we've got a lot to do in this area and lots of targets. Then we've got our regional areas. So there's numerous brownfield targets which we've identified that are actually around the mine infrastructure. You'll notice that here, this is where we talked about the immediate drilling campaign just here, which is the 5,000 metres of diamond drilling. And it'll be this area here that we'll also investigate. But there's all of this area around here that has great prospectivity. So you can see here, we've got East Pat, which is here. We're not very far here from the old powder house targets. The Central Patricia, which at one stage produced 650,000 ounces at over 13 grams a tonne. Again, this is to highlight that area. There's Central Patricia. You can see in the bottom left-hand part of the slide. You can see where Pickle Crow is, where our immediate drilling will be in the not too distant future. And you can see from this particular slide the numerous amount of targets that we can approach. So in a little bit of summary here, it's a great opportunity for us in a revival play in an area which is very mining friendly. We've executed the agreement to earn up to 80% of this particular project. This project itself historically mined 1.5 million ounces at 16 grams a tonne. It's largely been unexplored, and we've got numerous walk-up targets. It's, as I mentioned before, a tier 1 mining district. We've got all the experience on the board and management to exploit this particular asset. And as I say, we've got an exploration program which is just around the corner. But when you're looking at news flow going forward, we have the JORC resource that will be coming out within the next few weeks, certainly in May at some stage. We have a drilling campaign that will start on the 19th of May, 19th or 20th of May. We'll have 5,000 metres of drilling. We have further drill results that will come from that and follow-up drilling, no doubt. And by the fourth quarter, we expect to get some more resource updates. So lots of news that we've got based on what we're doing at the present, and obviously a balance sheet to back all of that up. We've got sufficient capital to make sure that it all works. So that's it from me. We can open up for questions, and anyone that has any questions from a technical nature, you can talk to Marcus. He's on the line now. And anyone that wants to talk about the actual acquisition details, I'm happy to walk you through those as well.
Thank you, Ray. We may just throw the questions at you, and you can pass them on to Marcus if you like, or whatever you guys decide to do there. We would like to know how the project perhaps compares to Bellevue at the same stage to start with.
It's a good question. Yeah, so what we've got is, and one should never, ever compare projects because they're always going to be different, but there are a lot of similarities between Bellevue and the way that started and the way this one has started. We've gone to an old, disused, great producing mine that's been left and unattended for many, many years, and now we're re-exploring that with modern techniques and with a great team. The difference here, of course, with Auteco is that we've got a walk-up resource. So as I say, within the next 2 or 3 weeks, we'll have a JORC compliant resource for the market to see in all its glory.
Mm-hmm. Does the company have any plans to further increase its land holdings in and around the Pickle Crow area, given the lack of exploration, like modern exploration that's occurred there, as you've pointed out a few times now?
Yeah, well, so when we first, and yes, the short answer to that is yes, but in a bit more depth is that we'll notice through our announcements, when we first picked up the asset, we had a certain land size, which was about 150 or 60 square kilometres. We've increased that to 320 square kilometres. So already we've picked up some areas around that, around the old mine, and we'll look at any opportunity that we can going forward.
So many of those historic gold mines in the area do extend to depths of up to 1.2 Ks. What are Auteco's plans in terms of deeper drilling?
At this stage, what we'll be doing is there's plenty of stuff for us to go from surface, and there's plenty of things for us to look down to about 500 metres. That deeper stuff, I'm sure Marcus might have some commentary around that.
Yeah, so I think as Ray said, our focus really at this stage is going to be on sort of the low-hanging fruit. We're really going to be looking within the top 500 metres from surface. There is great potential at depth on all of those lodes. Some of the deepest drill intercepts we have are sort of 3.2 metres at 134. But really our focus at this stage is going to be on those shallow zones of mineralization. So areas that, like Ray mentioned, vein 22 and vein 23, those are drill intercepts within the top 100 meters from surface of 5.5 meters at 10 grams, 0.9 at 878 grams a ton, and 1.5 meters at 444 grams a ton, which really haven't been followed up much deeper than 100 meters. Ray also mentioned the 19 vein, which was intersected at a depth of about 500 meters with 13.1 meters at 43, but really hasn't been followed up dip. So these are the sort of low-hanging fruit, extending areas of known mineralization, which is going to be the focus of our first 5,000 meters.
Yes, and so you mentioned that low-hanging fruit there, which you'll be focusing on obviously first, but Anton's wondering if you can drill from underground or are the shafts flooded?
So the shafts are flooded at the moment. People were down there as recently as the 1980s was the last time it was dewatered. So we certainly expect the infrastructure to be in fairly good condition. There's over 38 kilometers of lateral development down there. And I think sort of as a staged work program, our initial focus will be on that top 500 meters. Once we have resources and perhaps as things develop towards being a mine, we would dewater and then we would approach the next 500 meters of exploration from those levels, would be the long-term view for the project.
It's clearly a little bit hard now, guys, considering COVID, but who from Auteco or who from the core Auteco team will be on the ground in Canada?
We've actually had a team continuously operating on the project since we took it over in January. I was up there for most of February and early March, and I'm hoping I might be back next month to look after it. But the team is, we've got a long history of working together. They've worked on some of our other projects as well. So there's a great degree of trust there, and yeah, so we're ready to go essentially. COVID hasn't interrupted us at all.
Good to hear. There's a few questions here around working with First Nations groups in Canada. It's obviously quite important over there. What is Auteco doing to ensure a good relationship with the local people? Yeah,
that's a really important question. So the project is on the traditional territories of the Mishkegogomang people. And we've actually been very lucky. We've inherited a memorandum of understanding that allows us to operate in the area, which has been granted by our First Nations groups. That was put together by our earning partners, First Mining. First Mining have a exceptional community relations team, sort of 6 or 7 people working in the area, and we'll be relying very heavily on that good relationship that's been built up over quite a few years through First Mining.
This might be another one for Ray here, or maybe Marcus too, both of you will be able to answer it. What is the minimum cut-off grade or cash cost for underground mining in Canada? Does it make the upcoming resource feasible?
If you don't mind me answering that, Ray. Yes. So at the time of mining, the cut-off grades, the lower cut-off was 8 grams a ton. That was obviously sort of pre a lot of the modern mechanization that we've seen. So we'd expect that to be a lot lower. In previous NI 43-101 resources, that's been as low as 2.5 on some of the grams a ton on some of the ore bodies. I think we would probably have it a little bit higher than that. But I think this raises an important point that previous operators have come at the resources at Pickle Crow from the perspective of bulking out some of them on surface for an open pit potential, whereas Auteco really sees this project as going back to its roots and looking at the high-grade component, the high-grade vein component of mineralization that was successfully mined for more than 35 years back from the 1930s. That's really going to be our focus.
Mm-hmm. There was a historical NI 43-101 and resource estimate completed for the project. Do you expect many differences in the JORC compliant estimate?
Yeah, so I think that follows on from what I've just said. We're going to be taking resources back to the high-grade vein components. The number one vein was mined at sort of 26 grams a ton, 350,000 ounces came out of that. And the number two vein was sort of around 16, and the overall project was 16 grams a ton as well. So we see grade increasing in our resource model as a result of us stripping back to the high-grade veins. Perhaps tonnage will come down from those previous resources there.
Mm-hmm. Thanks for that, Marcus. And Ray, could you briefly describe the transaction and relationship with First Mining for us?
Most definitely. So it just so happens I can show you here for those that are viewing. So you can see that the very first box is we paid 100,000 Canadian for this and 25 million shares, which have been issued. And so that's what's gone to First Mining for the start of this. Then it's really important to understand that stages 1 and 2 are money that goes into the ground. There's no more money that goes to First Mining. So as you can see there, we've got an obligation to spend 5 million Canadian over the next 3 years, which comprises 750 within the first 12-month period and 4.25 million over the preceding, over the next 24 months.
Mm-hmm.
So you can see just from earn-in and our balance sheet that we're well poised to go to that next level. But most importantly about this particular structure is that we've managed to put something together which has got the lowest risk to our shareholders. But we don't go to the next stage until we're happy with that stage. Mm-hmm. And then the second stage, of course, is to earn up to 70%. And that's a further $5 million in the next 2 years after that. And then at our election, should we want, we have the option to buy a further 10% for 3 million Canadian. And you can imagine that that's really de-risking. By that stage, we'll have done over 10 million Canadian in the project, and we'll understand it intimately, and buy another 10%. It's only for 3 million Canadian dollars. So I think it's pretty clear. It's very simple the way we've gone about it, and it's very, very low risk with maximum upside to ourselves.
So there's obviously, from what you said, a methodical way to de-risk right there. Yeah. What is your monthly cash burn on that note?
Yeah, so what we've done is, again, it's a process we've done and it's tried time and time again. So the whole board per annum, not per month, but per annum only cost me $140,000. And our burn is at this particular stage, ex-drilling, is around about $23,000 a month. So you can see it's a low-cost operation with maximum upside, maximum potential. It's like a free option on some of this particular activity that we're doing. And of course, the drilling that we're intending, which is the 5,000 meters, at a first glance, is going to cost us around about $100 a meter, Marcus, thereabouts, 110.
Yeah, that's about right, Ray. Yeah.
And so therefore, what we do have is a balance sheet to keep. But we have the option, once we finish this first program of 5,000 meters, which finishes probably at the end of June, to keep the rig if we want, and then continue to drill, because our balance sheet is strong enough to allow us to do that.
Good to hear from the man himself right there. Thank you so much, guys, for the presentation today.
Yeah, thank you very much.
Thank you, everyone. Stay tuned. We will have Matador Mining up next. They are exploring the highly prospective, yet largely underexplored Cape Ray Shear in Newfoundland, Canada. Also in Canada, just like Auteco was operating. Stay on the line. They'll be back in about 5 minutes' time.